Eric, before we wrap, is there anything else you want to touch on about the cash flow statements?
Yeah,
Or is there like a message that you would like to share with people, things you wish
yeah.
they knew about it?
I say for the folks that are listening, we're going to say, as we wrap up this series, and I greatly appreciate anybody who's put the time in to listen to us talk for the last few hours on this. I'd say principally, the most important set of financial statements of the three, the balance sheet, income statement, and cash flow statement, absolutely understand the income statement. Right? From the income statement, we can then spend a little bit more time on the balance sheet. But once we understand the income statement and the balance sheet well, I think you're done. My only purpose for bringing in the cash flow statement is it kind of ties those two others together. This is, this if an accountant is trying to educate the masses on financial statements, you can't not talk about the three comprehensive sets of statements that are out there. But I don't expect anybody after this call to then call their accountant and say, put together a cash flow statement and let's go through it together because I understand everything else, but I now don't understand the cash flow statement and I want to understand it. If you have a highly profitable practice or a well-run and generating a nice profit practice and your balance sheet is clean and you're paying down your debt, I think you're fine to move forward. If you have nothing else to do and your accountant's sitting around waiting for you to call, then say, hey, for fun, let's look at our cash flow statement and discuss it together. I don't think that's going to happen. And so my job here is to provide it to you for educational purposes, but not something that I think you must look at from a management perspective or an ownership perspective. You understand your income statement, you're confident that you're running a well-run practice, you understand your balance sheet, you know why cash is doing what cash is doing. Fantastic. If you really are looking at both and you then confuse still, things just don't make sense, maybe adding the cash flow statement into that can provide a little bit more understanding for you. Because I will say this at the end, truly the only place you are going to see where owner contributions are made and impact the financials, as well as where owner distributions are made and impact the financial statements is only on the cash flow statement. The only place you're going to see when you take on debt and what that does to cash and when you pay down debt and what that does to cash is only on the cash flow statement. So it is important from that perspective. And so I think from that perspective, it adds value, but I won't suggest to the masses that they absolutely have to understand this as well as they understand their income statement. It may be something you look at once a year with your accountant. So
In a normal financial statement package that someone may get monthly or quarterly, is the
yes,
cash flow statement part of that?
no, it is not.
Okay. So if
It is.
someone goes, I've never seen anything that looks like that before.
That's right, because they don't. It's not a typical statement that is prepared because I think most people have a difficult enough time understanding probably the most simplest of them being the income statement.
Mhm.
Then
Or they're
thereafter,
not even doing that. They're just looking at QuickBooks.
that's right. And Josh, they may not even been doing that. They just look at their bank
They're
balance
looking
at the
at
end of the
the
month.
bank account balance.
Yeah, yeah, yeah. So
I'm
there's a
2 days
whole
to payroll. Do I have money to cover payroll?
that unfortunately is a super common strategy. Unfortunately. And that's sad, and we shouldn't be that way. But yes, I mean, we may laugh about that, but good golly, Rachel, it happens a lot.
Well, not to anyone listening to this
If they're,
podcast.
if they're clients of ours,
Yeah.
hopefully not. That's right. But I
Well,
thank you
great.
for your time.
Yeah. I think we're going to wrap up here and just thank you all for tuning in. And we appreciate the education, Eric and Rachel. It's great to have someone to lead us through these confusing topics that can be stressful when you sit down and you think, I got to look at all these numbers. So it's important to have a good, trusted advisor who can help you manage your books, help you succeed in your practice every step of the way. What do we got coming up next, Eric? What's our next
I
topic?
think our next series is going to be let's do a much deeper dive on what we've discussed here and get into how we value a dental practice.
Okay. That's going to be an
Looking
exciting
forward to
episode.
it.
And that's going to be, I'm looking forward to that. I think it's going to be a lot of fun. I mean, that's really where the energy comes from, why we're doing what we're doing and what those income statements are really going to tell us and why that all matters.
Well, great. Thank you, everybody. And join us next time for our amazing episode of Getting Down to Business. We'll see you then.
Thanks, everybody. Bye-bye.